What's up, everybody? I'm Jay,
I'm Christy.
and this is the Trading Floor Podcast, Season 2, Episode 2. In the previous episode, I had mentioned that we're bringing on a new style every other week, and this is that week. What we're going to be doing is talking about backtesting, the importance of it, how to do it, some tips and tricks to kind of help you out to speed the process, and so much more. We'll be bringing on Bear later in the video to show the process of backtesting a full day and then noting it down in a journal. And also, he'll have some input that he has to offer because we've done a lot of backtesting at this point. But before we get into backtesting, what I want to talk about, what Christy will talk about, is the simple fact of there's things you need to know and do before as a newer trader. And if you already know about this, you could skim through a couple minutes and just keep going. But it's important to know certain basics before you jump into backtesting. And so for the intermediate and advanced traders, you already know the importance of backtesting. You're probably already doing it. Then feel free to skip all the way to the end because I will be showing you how to pivot your data to just make your data go to that next level.
So, as Jay said, if you guys are intermediate to advanced, you may find that the beginning of this video feels like, oh, I don't need that. So I will link below, check in the link below some timestamps for you guys. So if you are looking how to extract your information from your backtesting, say you're already journaling and you have a lot of it, and you want to learn how to extract out like what day does best, what time does best, you will be interested in looking at that. If you haven't learned how to do it and like automate it, if you're sitting there like trying to do it yourself manually, that is a tedious process and painstaking process. So make sure you do jump to that timestamp so you can learn how to make your lives easier, save some time, and be able to really optimize your data collecting that you're doing. You're going to spend all this time collecting this data. You should really be using it to like the fullest and figuring out when is the best, most optimal time for you to be trading that strategy. So be sure to check out pivoting. If you guys want more information on pivoting and more detailed, let us know and we'll be sure to make like a more in-depth video for you, but you can always YouTube it too. I'm sure somebody has a video out there on how to pivot. So as far as this actual video goes, as Jay was saying, we're going to be showing you guys backtesting, but for newer traders, we wanted to kind of like get you guys started, but you can't just jump into backtesting. There's a few things you need to do before you really start backtesting. So number one is you need to have a broker. So you fell down this like trading rabbit hole. You found Forex. Yeah, you found Forex, and somehow you have landed in my world and my channel. So hello and welcome. But you're now like overwhelmed with all this information that you're seeing on YouTube and you don't know where to start. The first thing you want to do is find a broker that makes sense for you. I am not going to spend time in this video doing that. I've already created a video on how to choose a broker, which broker, and what that means, like what one is best for you. So I will link it up above here, and I will also link it below in the description box. So you guys will see it pinged up here right now, and then also check below if you want to finish watching this video. So find a broker. There's two different types for the most part. There's regulated and unregulated brokers. Be sure to do your homework and understand what that means. I personally have a couple of brokers I do link in my descriptions. I am based in the US. Please understand that when you are looking for a broker, it is dependent on where you live and your specific country's regulations on brokers. So you need to do your research. Don't just take it because I'm saying a certain broker, but you potentially live in another country that it wouldn't make sense for you to trade with that broker. So do your research on it and definitely check out that video I'm suggesting. Step two would be, once you decide on the broker that makes the most sense for you, would be to sign up for a demo account. Do not sign up for a live account yet. You have no business trading real money yet because you don't even have a strategy, let alone know if that strategy would work. So demos only. When you're signing up for a demo account, a little tip from me is to actually choose an account, like amount. They let you simulate an amount. Pick an amount that like is reflective of what you actually think you would be able to trade. So if you hypothetically can only trade $5,000 at starting out, pick $5,000. Do not pick $500,000 because the amount of money that you will see in your trades as far as a risk to reward situation will not be similar. And when you go to live, it will just mentally kind of throw you off a little bit. So that's my little advice there for that. So now you have a demo account, you have your broker, you're all set up with it. The next thing you need to do is learn. Like you have to
Hmm.
actually learn something. Sorry, you guys. If you are in the TTF community, we have the roadmap for you. And I highly suggest using the roadmap, going through all of the content in the order that we believe that is the best order to learn it in. There's also additional content on the website that you can add on to afterwards. But the basics of what you really need to be learning are things like market structure. You need to understand what market structure is and how the markets make structure and move. You also want to be learning things like price action, what moves price and drives price. You want to understand institutional trading, understand that you are a retail trader in this and that the institutions are the big guys. They're the ones that move the market. So understanding how and why they trade the way they do helps you as a retail trader be like the little fish behind the big whale. So you just pick up all the little crumbs along the way, which is usually more than enough for us to live off of and make a living off of. So that is something you want to understand as well, because that's important. Lastly, I do suggest learning some sort of fundamentals. So that means you want to learn things like the economics part of it. How is the economy and news moving these markets? Remember, you are trading a foreign exchange market. You're trading the currencies of these markets. Essentially, their economies. How well their economy does is how well their currency does. So understanding big events and news events that are happening in these different countries that you're trading their currency against another country is very important. And it definitely can be impactful, which you guys have heard us talk about, like trading high impact news and stuff before. So you need to understand all of those concepts. It may seem overwhelming if I just told you that. If you're in TTF, all of that is in there. It is all on the website. If you are not, this is not a plug, guys. You can still trade. You can trade for free. Information is free online somewhere. Those are the main topics that if you are not in the community, I highly suggest you go YouTube or search for like a free course if you're not able to spend the money, having somebody kind of streamline that process for you. So, but those are the things you really need to learn before you ever start actually looking to trade. So you did all your homework, you know all your basics, you understand the basic concepts. I don't even know where we're at. Number four, you are going to now find a strategy that you like, that resonates with you, that you're like, oh, this kind of makes sense to what I learned. You are not going to jump into a live market because you're like, oh, YouTube said it was a 99% win rate. How can I lose? No, you're
YouTube never
going to
lies,
take
Chris.
Never. You are going to take that strategy and you're going to learn how to back test it now. You are going to take it, work out the strategy, figure out, is it actually profitable? Does it work for you personally? Does it work during the times you want to trade, the sessions you want to trade, the pairs you want to trade? So it is important to know that you cannot move forward in a live market unless you actually know that something's going to work. It isn't a strategy if you don't have an edge. And the only way you know if you have an edge is if you have back tested it and proved that there's an edge to have. So we need to be back testing people because lots of you don't. Let's be for real. Nobody wants to back test. It's boring, it's tedious, it's the behind the scenes, unexciting work. But please make sure that you are backtesting. And I'm going to let Jay get into more about why, because Jay is very passionate about backtesting as well as Bear. And these are our main backtesters here at TTF. So you guys are in good hands with them. And I'll let him explain to you the importance of it.
Yeah, so as Chrissy said, I love my data. That's how I got started That's how I got started. Like in my field of engineering, I've just always enjoyed that. So I got my start there, and I've applied that ever since into trading. And there's a motto that I like to go by is, if you fail to prepare, then you must prepare to fail in that regard. The main two things that I like to go over, because I could rant about this forever, so I'm going to try and keep this as brief as possible. This could be a whole podcast topic in its own right.
Mhm.
But there are really two main reasons why you don't trust in your system. And if you're saying that, Jay, oh, I trust in my system, it works, I guarantee you don't trust in your system. Because if you objectively go back, like I'm gonna give you a homework assignment. The last month that you've traded live, go back and objectively back test that entire month And I guarantee you there's going to be so much percentage gain left on the table. You won't even realize, but subconsciously you've been tinkering left and right with your system, maybe because a divergence isn't in your trading plan, but let's say you saw a nice divergence with everything and one of your confluence didn't line up. Be like, oh, but like I see a divergence here, I'm gonna take it. That's not it in your system. Maybe you normally leave 1.5, like you leave the trade after 1.5 R, but you think it's going good, where greed kicks into play, and then it completely reverses on you and you lose your trade. Emotions are the final boss of your trading, and that comes with mental. But that's where backtesting comes into play, because it helps you build the confidence and build the practice of the craft. As boring and as tedious as backtest may seem, it is completely necessary and it's imperative that you do it, because every elite sports athlete practices, and you can't get around that, because the main thing with practice is that you will get so much better at it, and it will basically become instinct at that point. You don't have to think, you will never have to worry, you never have to judge anything because you've done it already. While I say that there's barely any difference between back testing and live trading, there obviously is, because you have an extra step of adding the trade into your broker, but you're doing the same exact thing. It's just you're adding it into your broker account for the trade. It shouldn't garner any type of emotional value whether you win or lose a trade, because you know what should happen, because you've done your back testing. You know how many trades you could potentially lose in a row. You know your potential percentage gain per month. You know everything that you need to going into it, so you shouldn't have any worry. And so that's where I get back to the fact that there's two main reasons potentially why you were scared to take trades and you're kind of gun shy in certain scenarios. Is number one, you're either risking way too much money than you're comfortable with. And I have been in that scenario. I have lost my first high six-figure funded account just because, I mean, I wasn't used to risking $2,000 a trade. That was only 1%, so it's fine in my trading plan, but you can't really teach that for anybody, because it's just, it's not normal to be risking $2,000 for something. And number two, if the amount that you risk is comfortable and you're completely fine with it, number two is you just don't trust your system. You didn't give your time to back testing and truly focus on doing your due diligence to make sure it actually works. So every time you get into a trade, you're like, I don't know if this is going to be good or not, because I, I I don't know. It's like I don't know the past couple months if a four losing streak is good. I don't know if I can make that 8 to 10% in a month for a prop firm. These are all things that you need to work on before you even trade. There's literally, you're gambling at this point if you have no idea what you could potentially make in a month or what your drawdown is. And so last thing I kind of want to go over is the simple fact that you have to understand your specific scenario and your strategy. I'll brief over this. Christia kind of mentioned the YouTube with 100% win rates and the crazy 1,000% gains that you could see in a strategy. Like, watch this video; it's going to change your life. Whatever.
At the end of the day, guys, let's be
It's
for real.
usually just clickbait. But
Yeah, it's clickbait. Let's
I'm
just call it
calling
what it
y'all
is.
out. In case you're watching this video, I'm calling you out. But
those people are making money off their views. I'm also a monetized channel. I'm well aware what clickbait looks like, but as you guys probably know by now, my stuff is very unclickbaity and very tedious. But
I'm not here to rant. I'm not here to call them
yeah,
out. The main
the truth
reason
is
I want
you
to
have to
bring
be
them up.
careful.
Oh yeah, for
Oh,
sure.
you have to be
And
careful. Yeah, you don't want to just trust them, because sometimes they'll back test it and they'll do. I'm sorry, this is your rant, but they'll do, like, they'll even say they back test. There are people who have channels that are quite large, and again, not calling out any specific names here, that back test for you. They validate the strategy for you. Do not believe that solely, because when we look at it, the way they back test versus how we back test, and we've gone through and have double checked some of what they said, it's totally different. And again, they may potentially only be taking 100 trades, which, depending on the time frame, could mean nothing. You could, if you're on the 1 minute and you're taking 100 trades, that could be a couple of days worth
oh
of
yeah,
data, and that's nothing. So you need to be doing your own homework here. It's nice to see somebody potentially already validate a system, but that doesn't excuse you from having to do your own back testing to validate it as well. So you can continue.
we're kind of on the same page, Chris, because that's exactly what I was going to bring up. It's the simple fact that a lot of people come into the Discord and be like, okay, how many trades should I backtest? And like, to be honest with y'all, there's no specific number. Everybody throws out that 100 because it just triple digits just sounds and looks good. But if you're on the 1 minute, which I think Bear actually kind of debunked, and he could probably talk about this later when he's backtesting, is well, at least you used to on the 1 minute on TradingView, you could only go back like about 1 to 2 months. And so on the 1 minute, yes, you got 100 trades. Congratulations. But if all 100 trades were in December, what if December was just a really good or a really bad month? You have no clue if it's an outlier. And then you're going to go into January and it's not doing good at all. But if like in hindsight, if you were to be able to test more on the 1 minute, maybe September, October, November were all negative and December just so happened to be profitable. You wouldn't know that. So instead of worrying about how many trades does it like take to validate my system, just trade as much, just test as much as you can. And so like the 1 minute is a lot harder in that regard because you can't go back as far as I personally know. Maybe it's a little different now, but it's more about going back as far as you can in time because that way you can fully validate and solidify the data was like, okay, it has been pretty consistent the entire year, so it should be good to go rather than, okay, it was really good this month. I have no clue if it's going to be good this next month. And so, last thing I want to go over, which we're going to be kind of doing whenever me and Bear look at the journal, is it goes unnoticed. A lot of the stats that you could do with backtesting, yeah, it's very boring, but you can get crazy into the point where you can
It's not
average.
that boring, guys.
you
Okay,
can
we say it's
you can
boring,
get to
but
the
throw
point
on some good
with
music, put on your favorite playlist or
oh yeah,
whatever, and just like
Spotify
zone
playlist is
out.
key. Like
It
find
can
find your
be,
Spotify playlist. You be
it can,
I it's a karaoke. Like it's
yeah.
karaoke with me whenever I'm backtesting. It's by myself. Who cares? I sound
J
great, but
karaoke's,
I'm
J
biased.
karaoke's, but like I find it super relaxing, weirdly enough. Like sometimes you can just like check out and zone out, find a nice quiet time in your day, and you just like go along. And it's like something about the repetitiveness of it. It really is. I don't know. I find it relaxing, but yeah, I'm definitely rocking out too a little bit. Not
Before
karaoke and as loud as Jay, but yeah,
before I
it
pass
doesn't
this
have to
back off
be
to
boring.
Christy, I do want to leave like one little tidbit before is that there are different ways of looking at data that you might not have thought of in the simple fact that if you back tested a month and you're not getting the percent gain that you wanted and you only tested one pair, what's interesting is what you could do with that is you could take the number of trades you back tested and divide it by the working days of your backtest list. So in case, let's say you traded from December 1st to December 31st, well, in working days, that's probably about 20 to 22. You had like holiday with Christmas. So think about it like 18 to 20. So let's say you only had 25 trades. Well, you would divide 25, the total number of backtested trades, by 20 or by 18, and you would get about like 1.2, 1.3. So on average, you would expect about 1.2 to 1.3 trades per day. So that could be an easy way of understanding and starting to formulate your own trading plan by taking the amount of backtested trades that you have and divide that by the amount of working days that has passed in your backtest time, if that makes sense. And so if you're looking for a strategy, because you want to get at least maybe 3 to 4 trades a day, but on average, you're only expected 1.5, well, you need to backtest more pairs that you like. Don't add pairs that aren't good. Be picky. Like your pairs should like you're interviewing pairs to trade for you. It's not vice versa. Like the pairs need to explain why you should trade them. And so it will take time to find potentially really good pairs, but do your due diligence. And that's just kind of an easy way to like use the data in your favor of kind of creating a plan of how many trades you want to expect per day.
All right, if you guys haven't figured out by now, backtesting is important. If you haven't gotten Jay's passionate rant there about why, there's a lot to go into it. But let's bring on Bear so you guys can actually see how to actually start backtesting. So you guys already know Bear. You've met him in a couple of our podcasts. If you guys don't, this is going to be Bear.
Hi,
Hi,
Bear.
Bear.
Hello.
So if you guys really don't know who he is because you don't listen to the podcast or anything like that, Bear is a staff member with us at the trading floor, and Jay is as well. So Jay was actually one of my like original back testers for a little while. There were a couple before him, but he's probably my OG right now at this point, and he's been with me for a while. So
I'm crying
100%.
inside, guys. So
No, I 100% fully trust him when it comes to back testing and the way that he does it, because I know that I have worked with him for a few years now, with like grooming him the way that I like it done. And Jay has also helped Bear. So since Bear's been with us at the trading floor, so Jay has also been working with Bear. So I 100% trust these guys to do
does that make
very,
Bear your grandchild?
yeah,
Thoughts?
I guess he's like my,
Oh,
yeah, weird. He's
thoughts?
like my working grandchild. Anyway, yeah, because like I guess you're my child and then Bear's like my grandchild. Anyway, what a lineage I'm
What
forming.
a happy
Anyhow.
Oh my
family.
God.
Anyhow, my point is that these guys are great, and I fully trust them when it comes to being very like objective with the data. I know how the system goes. They're very well trained in like zoning out a little bit when it comes to data collecting, and we'll explain that when we're going through the markups. But basically, the idea is not to hyperfixate like, oh, I just got 2 losses, and then like forcing yourself to try and find a win. That is something that you do not want to do. That's my disclaimer and tip for this when it comes to back testing. You really do kind of want to just like throw on that playlist or whatever you want to do, zone out, just mark them up. Don't think about win versus loss, how many you have already, because then you're going to start to kind of like be a little more biased when it comes to marking your trades. But we'll explain that when we start showing you. So Bear is going to show you guys, we'll pop up the screen. He's going to walk you guys through how to even just start setting up to backtest. So those of you who have never done this before, a lot of you say you don't know how, or you feel like overwhelmed because you see what we do and you're like, I don't know how to do that. And that's totally fair. Like, these guys are brilliant. They've been well trained. Like, I understand we do it to an excess. You guys do not need to do it to quite the extent we do. We're going to just show you a simple week, like a very simple strategy. It's brute force version 2 that we use here in YouTube world. You guys haven't seen much content on this, but I'll give you more content. I'll probably be trading with it live this week anyhow, and I'll record it. But Bear's going to give you a quick little walkthrough. Don't fixate on the strategy though, guys. I'll give you more content on that coming soon on the actual strategy if you actually want to know about it. The idea is just that it is a simple strategy with pretty simple rules, so we can quickly walk you through what a week would look like marking it up with backtesting. Okay, go ahead, Bear.
That was good. So, as you guys can see here, I've pulled up my trading view with the NAS 100 5-minute time frame with the brute force V2 indicator and our simple sessions indicator for TTF. So the brute force strategy is very simple. It is going to print signals based off of a moving average cross and some other oscillators that are part of the indicator as a whole. So what we're going to do is we're going to do just 4 days of backtesting because we don't need to spend an hour doing this, just to give you guys an idea of how to mark up and then transfer that into a journal. So what we're going to do is we're going to go ahead and go back to middle of last week, give us about 4 days. Now we're going to go ahead and do London and mixed New York for this testing, just to kind of have multiple sessions instead of just doing the one. So we're going to go to the top, click on the replay, and then we're going to go ahead and click on where we'd like to start our back testing. Now we do this because moving forward through the data allows us to be objective somewhat, because we can't cheat, right? We can't say, oh no, I would never have taken this trade because it's a loser. Basically, it allows you to kind of keep yourself a little more honest through your back testing. So what we're going to do is we're going to go forward through this, mark up each trade, and then with a vertical line and a position tool, and we're going to move forward through the couple days we have. All right, here we get our first 2 signals back to back. So what we're going to do is we're going to come up top, give our position tool. So our first is a buy. We're going to mark this with a vertical line and a position tool. We're going to take the swing low, which is the rule for this strategy, for our stop loss. It's a pretty quick trade. It's a loser. We love traders. We love losers here.
Oh, that's
Just
exhilarating.
honest. Whew. Do love those. And then it's followed straight up by a sell signal. So we're going to mark that one with a vertical line as well. Give ourselves the sell position tool, mark off the swing high. And for this strategy, we're targeting a 1.5 RR. Now you can do more, you can do less. it's how your strategy is going to be planned. And you can also test for multiple RRs in your testing. That's always an option.
And just a little quick tip while we wait for the next trade. What me and Bear do, a lot of people don't, is we actually love to put vertical lines on our trades, because what that allows us to do, we don't have any oscillators on the chart right now. Well, now we're getting a buy here. But what that
Okay.
allows us to do is we're able to look at a vertical screen and see exactly where all the indicators are aligning for our trades, and also for backtesting purposes. When we take screenshots, we're able to look back and see specific times that we took the trade, just to make it a little easier on ourselves.
It makes it easier to relocate that trade because of the stamp on the bottom.
Exactly.
Then being like, what day was this? What time? What month?
Exactly.
So it makes it much easier looking back to double check your data and make sure it all lines up and matches up, and also just to go back and double check if you need to. So we didn't get a buy while we're holding this one. This strategy, you take everything regardless. So we actually had a nice winner here. Oh, no, not quite. This one lost. This one lost. We're going to keep going.
And that one wins.
And that one wins with a beautiful wick.
We love news, whatever that was.
That one looks like news, right?
Yep. Then we have a sell here. I'm going to go ahead and mark this off.
So just to make a comment here, when we're doing this, obviously the swing high, swing low, the situation he's talking about is a little bit subjective, which again is why you should be verifying your own. If somebody tells you to use a swing high, swing low in a strategy, you have to test it yourself, because your swing low, swing high might be a little bit different than we would mark. As you guys can see in that one, he didn't technically use the swing high that was up there. He used a level that was closer, because that swing high is just obnoxious. Like nobody who's an experienced trader would use that high of a level on like a 5-minute time frame, because then you're going for such a massive reward. You're asking the market to move a really large amount, and you're probably not going to get it in a relatively quick time frame if you're on a small time frame like a 1 minute or a 5 minute. So just kind of be mindful of that too. Like it's not always the swing high. Like if there's been a huge move, you can also look for like a level that might also makes sense. But we also show all of our back testing. So anything like this that we would do, we would show you guys and take pictures of. It's another tip that I do suggest, is that don't just mark them up in journal, take the screenshot of them so you can always go back and kind of see like, what were you thinking? Where did you place that trade later on?
I'm going to speed this up just a little. Oh, I can only do 10. I'm going, there we go. We're at the next day now.
That was the most annoying trade to watch.
I know, but it wins at the end.
It does win.
It only took.
And also, just a side note for you guys who have free TradingView, the replay function is probably not going to be an option for you. I don't believe it is anymore. It's not, right? Somebody correct me. I have to double check that, guys. I'm pretty sure you can't replay mode on the free version. So if that's the case, it doesn't mean you can't backtest. You can still backtest. We're just suggesting that you use replay mode, because if you're still new, it's very hard for your mind to objectively look at the market and not like subconsciously, even if or consciously, some of you might just be straight up cheating it, but you may be looking ahead, and it's very hard for you to not like mark up according to what you're seeing in the future. And please, just if you don't have the ability to like do this replay mode, really try to like find ways to do it. I know people do all kinds of tricks to like cut their screens off. They like put papers over it, like whatever you need to do in order to like not like cheat yourself, because if you're not doing back testing correctly, you really aren't going to do well anyway. But just be aware of that. But if you do have the ability to do this replay mode, absolutely use it.
I'm literally on the edge of my seat right now.
If only the 5-minute chart moved this quickly.
And that I will also say that too. A big thing for backtesting, which a lot of people, this is their gripe about backtesting, is you have to understand the psychology that it comes to backtesting. Yes, it's very good to do your research, but it could be detrimental to a point. You have to understand that the chart is going to move way different than backtesting. You can instantly see, like in our case, that we're getting buys and sells and we're winning and losing. But understand that this is the 5-minute chart. Obviously, these 5-minute candles are moving like seconds for us, but they're going to take 5 minutes. So you're going to be sitting in trades for 30 minutes to an hour while we're only sitting in for 5 minutes. So just make sure you're able to flip that switch in your brain. Like, okay, this is now live. This isn't backtesting anymore. Like, just set your trade and go do something else, because it's going to eat at you and you're going to end up babysitting your trade, and then you're going to do things that you normally wouldn't have in backtesting land. So just kind of want to throw that out there.
And to plug our first episode for season 2 of the podcast, if you guys didn't check it out, to go check it out. It is about mindset, but we do kind of talk about that a little bit during that episode with Roxy and Ian, where, you know, we talk about all of our struggles with like watching charts. You know, this is, like Jay said, sometimes a little bit difficult to the instant gratification you get from backtesting versus what you get in a live market, and the thinking you're seeing things that you're not seeing. So that also comes down to really having a plan, having a structure, and something that you're sticking to. So making sure that you're like, put your rules at the top of your screen if you need to during live trading, or a post-it note on your screen or something like that, to be like, am I breaking my strategy rules or my trading plan if I, you know, change something with my trades? That might help keep you a little more accountable so you don't tinker while these trades are running. So as you guys can see, we do 1.5, but 1.5, if you guys have followed me for a little while, I pretty much always do 1.5. It's just kind of like a number I find is the most generic and works majority of the time. But 1.5 is what we just do as a standard for us to test. It's a like worst, I don't want to say worst case scenario. It's just our standard, right? So there's always the potential, especially with this particular strategy. Again, this isn't about the strategy this video, so I'll make a video about that. This strategy runs. There are runners with this. This strategy, as well as Happy Trail, you can see some really good runners. That doesn't mean you need to stop at 1.5. We just test 1.5 to see, like, if that's what we consistently did, would this be profitable? But we also always look at potential. So what we'll do is look at, did it hit 1.5? And if we held beyond 1.5, what would the potential have been of that trade? So sometimes in our backtesting, you'll see a base, like we give you the basic, like what you would have made percentage wise based on 1.5, but we'll also write something like potential. And that means what was the potential of that move that you may have gotten, which is usually substantially more percentage wise than we ever get with 1.5, because you can get massive runners like Bear is showing you there. I don't even know what was that. I missed
it. Was like a 10.
Like a 10. Yeah, it looks like a 10. Yeah. So
and that
like,
was with
you know,
the less conservative stop loss, or the more conservative stop loss. If you'd taken the actual swing here at 15 pips, that was a 20R.
So
it stonks.
You know, so it's huge. And even if, you know, obviously a lot of you are like, well, how would you know to get out? You don't, exactly, but you can use the market to the left. You would use previous levels that are to the left when you are looking at it and kind of targeting, like, where was the market? You may have to go up higher time frames. You don't have to do that on this Bear. I can show it when I show you guys strategies. But yeah, that would be another area of interest. And then you would trail your trade all along. You would never let it go 20R without securing profits. Let me be clear.
But anyway,
you are
guys,
going to secure
this
profits.
is about backtesting. We'll have another video coming out with Brute Force about trailing and how to trade that. But let's kind of finish up this backtesting.
Well, I'm just explaining, because you can do multiple take profits too. So we'll show that to you too. So don't think you have to sit with 1.5, because that's what we did. If you want to add in multiple take profits, you can. Yeah.
There's multiple things you could do. No one thing is perfect.
Yeah, you could add in break evens, you can add in trails, you can add in multiple take profits. Whatever is your strategy you're testing, that's okay. We're just showing you a basic 1.5. Okay, so we have our week now. Do you want to show how to journal it?
Yeah.
All right, so let's show them. We're going to show you guys the TTF journal.
Yes.
Because that's what we use.
Exactly. And I was going to say that if you are a member of TTF, we do offer certain tools, and a TTF journal is something that we've created which helps you as well. And so what we're going to do now is we're going to go to the Trading Floor website, and we're going to sign into the website. As you can see here, Bear is signed in. This is the home page. What we'll do now is we'll pan all the way to the right side and click the Get Smarter dropdown. Once you do that, you'll see the Resources tab, and you click that bad boy. Once you click that, you'll scroll all the way down, and then you will see the TTF journal download along with the 20 pip challenge, the glossary, and other things of that nature. But once you hit download, it'll bring you to the Google Sheet. Now, you will not be able to edit this specific sheet. What you'll need to go to at the top here is click File and then make a copy. Once you create a copy, you'll create your personalized version of the journal, and then from there, you'll be able to do any edits that you need. Just be careful. I do gray out certain columns at the top. That's usually the things that are automated, but we have a how-to journal video on the website as well that you can go over to see the different types of things you can edit. So with that
If
being
you go
said,
to the how-to section on the website, there is a video by Jay and it says how to journal. And that will also show you how to do all this in a little more detail. We're just kind of skimming through it. This is for if you guys are in the TTF community, or if you are thinking about becoming a member. This, you guys get this, you get this for life. Like once you save it, you save it. It's just a really good resource to have. But it's not like, if you're not in the community, this is not a sales pitch to you guys. There are free journals out there to do. If you are even somewhat handy with Excel or Google Sheets or something, you can see what we have here on our screen. Try to mimic the same type of columns for yourself. You don't have to use ours. You can still journal using a free one you find online or something like that. I've seen plenty of free things out there. So just look around a little bit. But if you are in the community, this is what we're using. It's a little more sophisticated than some of the other ones I've seen, but a free one, a basic one will be just as fine too.
So I've gone.
Go ahead.
I went ahead and cleared this sheet of the examples so that we can go ahead and fill it up. And now I'm going to go ahead and put this on a split screen with my trading view so that I can do both at the same time. If not, this would be really tedious to have to alt tab.
True.
Every
if
single
you have
trade.
if you have multiple monitors,
Yeah.
that's you're good to go. That's whenever you can like hammer through this. But if you
That
don't,
is
you might
where
just
the
split
dual
screen.
monitor. Yeah, people
Oh,
always
that's
ask,
where
"Do I
dual
need two
monitor,
monitors?"
even
This is
even
where-
triple monitor supreme.
Absolutely.
You don't need that much, guys. But yeah, people always ask, do I have to have a dual monitor set up? You don't have to. But this is where, yeah, obviously it comes in handy. Or even like a portable monitor. It doesn't need to be like something crazy set up, but even like a cheaper portable monitor would be nice, so you don't have to sit there and go
Yeah.
back and forth. But
I mean, if you also have a sizable screen, you can
or
also
a
do
sizable
this.
screen, yeah,
It's
where
not
you can split
it's
it.
not the worst thing in the world.
Yeah.
One of the tips that me and Jay like to do with a lot of the things we do is copy paste, right? So like here, we know that we're only trading NAS. That's the only thing we're inputting to this chart. So instead of filling this up with NAS every single line, I'm just going to click in the corner, and I'm going to drag down. That copies NAS. I don't need to deal with it anymore. Next, we're going to have the session, the dates, the long short, the stop loss, the win loss break even, and then the rest of this will auto populate, and we'll go ahead and put our trading view pictures in for our screenshots. So here we started back on the first day. It is Wednesday, 18th of January. So the session we can see is green. That's London. So we know I have London. I know I have 3 trades in London. So I'm going to go ahead and copy that London down for 3 trades. I also know that I'm doing January 18th. I'm going to type Jan 18. It's going to populate. And then from here, I'm going to copy it, drag down, and paste. Boom. I have 1 long, then followed by a short, followed by a long. And then here I need to go through and record what the stop loss is. The reason why this is a good idea is because you can create stop loss data, and then you can find out like maybe a lot of your losing trades are all sub 20 point stop losses.
That's
so maybe
true.
you need to start standardizing a 20 point or more stop loss, right? All data is good data. It's a question of what you do with it afterwards. Isn't that right, Jay?
Oh, dude,
Yeah.
you couldn't have said any better. No,
I
but
mean,
just
like
for
20
reference,
losses in a row is good data. You want to know, could I potentially have 20
could I
losses
just
in a row?
reverse
You know?
this? Could I just reverse this
Yeah.
thing and just trade opposite? It tells me to buy. Let me just sell.
No,
But yeah,
you know,
what Bear, I've actually done this in previous journals. What Bear's talking about is you can actually count how many wins and losses you have with a specific like zone of points as a stop loss, like 20 to 30. If I ever have a 20 to 30 stop loss, like how many times do I win or lose? If my stop loss is 40 plus, how many times do I win or lose? And it's all kind of things you could do. You can get micro specific, and it can get a little borderline crazy, but it could work.
And just to show you what I did here, in the top right of your trading view, there's a camera picture. If you click on copy link to chart image, it'll give you a trading view link. And then this later on, when you click on it, will create a screenshot on the web that you can go and re-reference later on.
Or you hit Alt plus S.
Or you do Alt plus S. I'm a pleb though. So next we have our mixed trade. Mix was denoted by the gray space, and then red is by solely New York when London has closed. So here we have Our mixed, still the same session, so I'm just going to go ahead and copy that down. It's a short. Our stop loss is 62.3. That's a comma, not a point, for all my European friends. And it was a winner. And then we're going to go ahead and snap a screenshot of this and paste
I
it
will
in
also
there.
say a small thing that we do that might have gone unnoticed is the simple fact that we mark all of our trades first and then we note them down, because the simple fact you could see in the trading view pick column, we leave gaps. Whenever we can have multiple trades in one screenshot, that's just more efficient. It's less back and forth, less copy and pasting. So like Bear did previously in his first 3 London trades, they were on top of each other. So we're just going to take one screenshot and denote, like, if there's a gap, that means the last screenshot will be a collective of those previous trades. So as you can see, there's 2 gaps and then a trade view pick. So you know that that trade view pick shows the 3 previous trades. So it's just an easy way to kind of conserve time a little bit. It does add up, weirdly enough.
Yeah. So what he means by that gap is what he just did there, where he leaves a space. So like where the pictures are. If there's a space, if you ever see that on our backtesting data, it just means that look at the previous trade, the link above, because 2 trades are there. And that's all he's trying to say there. And yeah, work smarter, not harder, guys. That's what we're trying to say. You don't need to sit there and like take a picture and zoom in on each one if it's already been captured. Just
Exactly.
make sure that
Mark
skip
up
it and then
everything
you're ahead
first.
now.
Mark up an entire month, then go back and note the entire month in the journal. That way you could take sometimes 4 to 5 trades on one screenshot and you could just zoom through it a lot quicker. I'll also say this too, for those in case who are newer to the channel. I had kind of back in the gap coined the term mixed, where like London and New York meet together. And that's what you see in the simple sessions indicator here, where you see a green, which is London, like this kind of tan, which is mixed, and then New York is just only New York. So that we help split the sessions even more, because when London and New York are both in the same trading session, it is completely different between just London Open and just New York Open. So it's kind of a good way to split up the sessions.
Yeah, so I mean, you guys who have been following me for a while, you probably already know that I call it mixed, and you've heard us talk about mixed because we've been showing data for a while now in some of our videos. But if you are newer and you are just kind of stumbling upon this, mixed is not an actual official
No,
like term that
it's
other
not.
people use. So if you're going to other communities or to other people and you're like, oh, but I trade mixed session, they will think you're a little bit weird. I'll be honest. But for us, we do separate it because, like Jay said, there is a lot of overlapping. Like when that last time like segment of London overlaps with the opening of New York, there is a lot of volatility there and the market has more volume in it. So the momentum's there, the volume's there, and there's news now being shared between 2 different markets. So there is a lot going on in mixed usually, and that is why we separate it. Once London closes, then it's just New York trading, and it is New York's afternoon, so it tends to be a little bit I don't want to say it doesn't always kind of slows down, but it kind of just tends to be a little bit more predictable, I would say.
Yeah.
Whereas mixed can be definitely a little more volatile. Some people like that depending on your strategy. And then for other strategies, it will do really bad during mixed and might do better in something a little bit more like dependable, like a New York, like just the ending of New York, or maybe even just the opening of London. So yeah, that's the idea of breaking these down, figuring out where will your strategy do the best, like what is ideal for it. So that's why we do this. You should be looking at that.
So Bear just finished with his backtesting. As you could see here, he chose journal 1, which just so happens to be like a fixed reward type of journal. So all you truly have to do is change columns A through F, and everything else automates for you. And as you can see to the right, it even goes to the point where it shows you the session splits, even shows you the monthly splits. You can even see which specific pairs that you've tested if you just want to see those. We obviously only did NAS. And you can even go into more detail. What Bear was kind of highlighting up at the top, that's kind of a daily and weekly kind of split stat, to where you can tell a day like, I want to see this specific pair, or if not all of them, from this specific day to that specific day. If you only want one day, then you just put the same day for both the start and the end date. If you want to see a complete week, then you put that entire week. But the data allows you, like as you could see here, it automatically crunches the numbers for you and tells you specifically in what session is doing what. So that's a cool thing about doing the journal in that regard. You get instant feedback of what you're able to do.
Yeah. Again, for some of you that might be way more advanced in what you're actually looking for, you might just want to be just getting a general idea. Is this even worth my time, and just running through some quick numbers? And if that's the case, then you could just do what Bear just did and look at the left side of the journal and pull back over, and you would just see at the top the very basic stats of what he just like did. So hypothetically, you have 100K balance, and in this case, if we took all those trades for that week, we would have had a 3% gain on the account, which means you would have made $3,000. The win rate is 50, which is actually very good. Remember, you're going for a 1.5 reward here. So if you're getting a 50% win rate, that's actually really good, which is why you are up on this account. So I know some people, again, get kind of hung up on these win rates when you're a newer trader and you think like you need a really high win rate. That's not necessarily true. What you need
just
is
need
a good risk.
consistency.
Yeah, you need a good risk management plan, and you need consistency, and you need to have a reward that outweighs your win rate. And in this case, we do. Our reward is working with our win rate. So you guys can see all that there. And, that's just a general quick run through of 1 week. We're just showing you one quick week here with one of our like simpler strategies to show, just so you guys can get an idea. But yeah, that's what that looks like. And then you guys can see, I think this is worth noting, even if you're just looking for some basic, like, is this worth me going into all of that more detail over there on the right side that Jay was just showing you? It's just looking at the session. So you guys know we did do London mixed and New York, and then that breaks it down too in those little boxes. We skipped Asian session or Tokyo session, whatever you guys call it, because we know, like we showed and talked about, it just it doesn't work well with this strategy. But you guys can see even there, it will break it down even more detail for you. How many trades did you have in each of those sessions, and what was the win rate, what was the percentage gain for each of those sessions? So you guys can kind of see, if you only wanted to trade London session, you would have had a 1.5% gain and a 50% win rate, which would have mean, in this case, you would have made $1,500. Mixed session, mixed session, you would have only had 0.5. So you would have only made $500 because you only had one trade. Oh, two trades.
This is a very small sample size.
It's a very small sample. Yeah, you would never, also, disclaimer, you would never ever only test 1 week and then go into the live market and be like, looks solid. You want to have a good amount of data. For something like a 5-minute time frame, I honestly would say you want at least 3 months, ideally 6 months.
Yeah.
If you could, a year or more is excellent. But I definitely do suggest that you have at least 3 months, and make sure that you really have a good amount of trades that you can really look at here in these sessions. If you're going to be looking at it, 1 trade or 2 trades, sorry, in mixed session, 1 win, 1 loss is nowhere near enough to know if this strategy works for a mixed session. So do not base it just solely off that. We're just showing you a sample size here. All right, let's get into something that actually does have some more data. So now you guys kind of get an idea of what the basics would look like if you're just starting. Don't be afraid to do it. Don't get overwhelmed by all the stuff you're seeing on the right side of that journal. You could do something simple like we just showed you with Bear, just marking it up and just looking at that top line there and just the sessions.
Yep.
That's more than enough to get you guys started. Then as you get more advanced, you can start looking at all that stuff on the right. That's for more of our intermediate advanced traders who really want to get serious.
True.
So let's get serious for those people who want to be like, all right, I got 3 to 6 months to maybe even a year worth of data now. What do I do?
I have a lot of trades. You said 100 is not enough. I gave you 500.
Yes. So let's look at it. So we're going to take an example of some of our actual data that we do have here in the TTF community, because we have lots of it. So it's easier to just pull what we have. So Jay's going to show you what we have and show you how we actually go through and analyze the data once you have it all. So we'll go through that now.
All right, so before I get into the advanced filtering of the data, what I wanted to say is thank you, Bear, for coming on and giving us a backtesting lesson. And for the newer traders, I hope this truly helped you out, because there was a lot of minute things that we did, and it's very important that you learn backtesting as a skill. It's a very easy skill to develop. It's just you got to practice it and hone in on it. Like we said before, very, very boring and tedious. But thank you, sir, for coming out here. And also, any last comments, any tips and tricks? I know I brought up that 1 minute replay mode. Do you know anything about that?
Yeah, I first off, Pleasure to be here.
you.
Based off of the data thing, there's a new update on TradingView that now gives us, with premium, 6 months of 1 minute data. So those of you trading the 1 minute time frame can now actually get some full back testing done without having to do forward testing for 6 months.
That's
Which is
pretty awesome.
huge. Because you were only getting
That's a
3 months
game changer.
roughly. Yeah,
You
3
were
months
getting
before.
2 weeks.
Yeah.
Oh, on 1 minute. Oh, 1 minute. Yeah.
On
well,
1
yeah.
minute. Premium got you a month.
Yes. Yeah.
Pro got you 2 weeks, and anything lower than that got you like 6 days.
That's actually huge.
Hardly anything.
You're gonna have to know life on the 1 minute, but at least you have the capacity to do that and get that data. So yeah, I mean, 1 month can be viable now if you truly put in the time to go back.
1 minute. Sorry, 1 minute.
Yeah.
Not
1
1
minute.
month.
Sorry,
But
sorry,
1 minute. And yeah, because before your only option was to forward test it early, and that's time consuming. So yeah, so this is exciting, and thank you for sharing that. And I hope you guys all do take that tip or trick if you are using the 1 minute. So that's exciting. Thank you, Bear. And thank you for showing us how to do the basic version of backtesting and journaling.
My pleasure. I know it's been requested heavily from the community, so it's nice to get this done.
Yeah, thank you.
Okay, so for the intermediate and advanced traders who rudely skipped through our entire video to come all the way here to learn what they wanted to learn and not did a recap of backtesting, I'm watching you. No, I'm joking.
It's okay.
So what I'm going to do here, I'm going to share my screen. And from there, what I will do is show y'all how to use a pivot table. And so in that...
Exciting.
Yay. Yay.
Half of them are like, what's a pivot? Google just got asked, what's a pivot?
So,
all right, you guys.
What a pivot table allows you to do, obviously, what I'm using here is Outback Asian. This is one of our indicators. You're literally, as you can see here, from April, pretty profitable just trading kangaroos on the 1 minute with AJ and GA. It's a meme, but it's also a dream at the same time. But anywho, what I'm going to do here is you have a lot of data. As you can see here, we have about 370 trades. Maybe you don't have as much time as you would like to trade, and you want to be able to see like, our specific day is better than others, so I don't want to say waste time, but you could be more efficient with your time. So in that regard, what we're going to do is create a pivot table in that
say, and I mean, we've talked about this in the episode 1. What if you're a full-time worker and you can only trade maybe certain times of the day on a Monday and a Thursday? They're the only days that you have the availability to really sit at the chart. So, you could just go through TradingView and really look at all the dates and drive yourself crazy and only find the Mondays and only find the Thursdays and backtest them. That is an option. But if you are looking at this as you would like to progress this, stick with one strategy, and as you're able to grow your capital and grow your trading skill, potentially start to move away from another career or open your availability to be able to trade more days, you should then test all of the days and figure out, one, do the days that you currently trade, do they work? Number 2 would be, if my availability opens up as I become profitable, what other days can I add in? What are the other best days I should be adding in? You do not have to trade Monday through Friday just because you feel like that's what you need to do to be a profitable trader. You have heard all of us who actually are full-time traders who say we do that like full-time. It does not mean we work Monday through Friday sitting at a chart. We usually only trade a few days out of the week. Most of us are usually like a 2 or 3 days out of the week that we actually trade. And then we're doing all these other things like backtesting or doing whatever we need to do. So this is the idea of pivoting, grabbing what you need and then making your trading plan now from your strategy.
So what we'll do is, thank you, Christy, for that.
You're welcome.
What we'll do is come at the top of the sheet and you hit insert and then pivot table. And so this screen will prompt up in the middle. And what you'll want to do is you want to make sure it's a new sheet. If it's in the existing sheet, it gets very messy. It takes up a lot of space. So just put it in a different sheet. And so this is the main thing you want to do. You want to click these 4 circles and select data range. And it is imperative that you have a row with labels. Like in this case, it's pair, session, date. You need to have the first row as a label, and then the rest can be your data. So in this instant, what I'll do, since I'm trying to select a range, I will just select up to here. You don't have to select all of it, because once you could see here in this submission, like it says L9, but I'm just going to say L. Whenever you just give the column and not a specific row number, it's just going to account for all the rows. So in this instance, it's going to be accounting for A4, which is the pair here at the top left, and it'll be accounting for L, which is all the way down into like infinity almost. But whenever I click OK and click create, then this new sheet at the bottom here will pop up. You can right click it and rename it whatever you want. I'm just going to leave it as pivot table 2 because I don't really care about the name. Also, well, I'm just going to leave it here because you'll see soon. So here's the idea. I need to move the camera over because I can't see this. So whenever you open the pivot, you'll see in the top left, you click this little light blue area, and then you'll see an edit button here. I don't have to click that because it's already prompted up here. If you don't see the menu, then you need to make sure you click this edit button. It'll be green. But anyway, so in this regard, what I want to see is for each specific day of the week, how many wins, how many losses, and what's the percent gain. So in order to see that, what I'll need to do is on the row side, show the date. But, and this is the most important part in order to filter dates, make sure you follow along right here. If anything, if you don't listen to anything else, note this, because pivot tables won't work. What you need to be able to do in order to see the dates is change your date format. So what you'll do is you'll come to column C, you'll highlight column C, and then you go to this 1, 2, 3 more formats drop down and click that. You should be able to see this to where it gives you a date with the actual day, like label on it, like Friday. If not, you go to custom date and time and you'll scroll down, which in this case is at the top for me because I just used it. Just choose whatever shows like Monday, Tuesday, Wednesday, Thursday, Friday, and click that. Whenever you click that, you hit apply. And as you can see now, if I move it, you'll see like instead of just April 3rd, you'll say Sunday, April 3rd. And so if you don't want your normal backtest sheet looking like this, then simply right click your backtesting log, then select duplicate. And whenever you select duplicate, it'll make an exact copy of it. So you can have one specific sheet that you just copy all your data to that stays in this date format, while your other sheet is in the normal like month, day, year, or day, month, year format, whatever you want to choose in that regard. So this is important. Make sure you change the date format of the cell. That way you could see the days. So now that we changed the date column, that way we could see the days, we are good to go to pivot our data. And so what I'll do here is in the row section, I'll click add, and then I will select the date column. Whenever I do that, as you can see here, it prompts all the days that we back tested. I like to highlight this entire column and just put it in left format. That way I can like read the days of the week. And so from there, we're good to go. So what do we want to see? We want to see wins and losses. And so from there, we'll add a column, and we want to be able to see the labeled wins and losses. It's losses before wins, but you could fix that if you go into the columns tab under win, loss, and break even, and then under order, you just change ascending to descending, and then you'll put the wins and losses in that correct order. From there, we want to be able to see the values of how many wins, losses, and percentage gain that we got through each specific day that we traded. So in that, you will add a value and you'll add the wins, losses, and break evens. As you can see here, we can see specific wins and losses for each day. From there, we also want to see the percent gain that we could potentially get each day. And that's simply adding the percentage gain under the value section as well. And so from there, it looks very complicated, but going from left to right, this is how it reads. It counts the amount of wins that you get per that specific day. Then it counts the percentage gain from those wins that you got that day. Then it counts the losses that you got that day. Then it counts the percentage gain from the losses you've incurred that day. And then all the way to the right, it'll give you a grand total of trades that you've taken, and then a grand total of your percent gain for that specific day. Simple enough. And so last and not least, what we're going to do now is we actually want to filter it to only show Mondays, because that is what we're interested in. And so from there, we'll go at the bottom is the filters. You add that and we'll go to date again. From there, in the status section showing all items, we'll left click that, and we'll at the top, we'll filter by condition. And then we need to add a condition, so we'll click none. And then from there, we will select text contains. Whenever you select text contains, here right at the bottom, you'll say value or formula. And from there, what we'll do is simply type Monday and then hit OK. From there, Now we have the exact number of trades. We have the amount of wins, the amount of losses, and the amount of percentage gain we have gained from our backtesting data, all this data on Mondays specifically. And so what I'm going to do now is quickly go through Tuesday through Friday. We're going to fast forward this because it's very tedious, but all I'm literally doing is I'm copying and pasting this top left blue shaded area, and I'll just show that here. So if I Control C and then Control V, it'll copy the entire thing. And so from there, all I do is literally go back into filters and change Monday to Tuesday. So that's all I'm going to do now, and we'll see you shortly. With the power of YouTube magic, just like that, and a snap of a finger, I've done it all for you. But no, it only took about 5 minutes. Bear and Christy can attest. But I did add a little bit of columns, a row at the top, just so we could see the specific day and the win rate. It obviously doesn't show you the win rate, but all you have to do for that is just take the number of wins and divide that by the total amount of trades, which, as you can see, 482 divided by 76, obviously times 100, it's 55.6% win rate. But as you can see here at the bottom right, it will show the percent gain, and then at the top right, it will show the win rate. And so as we can see here, I mean, Monday's 55 and 29, Tuesday's 53 and 25, Wednesday's 52 win rate and 21% gain, Thursday's 52 and 26% gain, Friday and Sunday fall off in that regard. So maybe not trade that. So I will say, and it might not make a lot of sense to y'all. It's like, why? How's there an Asian session on Friday? So this is UTC -6, which is Central Standard Time in the US. And with that being said, Asian is from about 6 p.m. to 2 a.m. at that time frame in UTC. And so the last 2 hours of each session actually falls off into the next day. And so Friday Asian session is actually just midnight to 2 a.m. of Thursday's Asian session, if that makes sense. And then Sunday is just the market open of Asian session. And so that's why we have Friday Asian session and Sunday Asian session, just to kind of give a rough idea. But if you so happen to trade Asian session, maybe just call it on Thursday. Like, you don't really have to trade Friday. You've only gotten 22 trades since April 1st and all the way into December 31st. So maybe just have a long extended vacation or weekend. Maybe you can make it a vacation, but Sunday is kind of the same regard. It's kind of a lower win rate compared to the others. It's still pretty decent. So you could take that off and just trade with this data Monday through Thursday, because Monday through Thursday, you are netting around 102% of the 119% gain that you've gotten in backtesting. So these 4 days are basically accounting for all the data. And I was able to find that within like 5 minutes.
So Jay's been let go, and I am now being promoted to the new co-host of the Trading Floor podcast. No, we're just
Congratulations on your promotion, Bear. Jay's internet sucks. Apparently the weather's bad where he is at, and it has dropped him from this call and he's disappeared. But the good news is that he was pretty much finished talking about what he needed to talk about. So we've been able to use him for what we needed him for, and we are saying goodbye to him now at this point. So Bear is going to wrap up this podcast with me. As you guys saw him talking about pivots a little bit there, if it does seem a little bit too complicated for you, don't worry about it. If you are looking to get really into pivots and you're like, whoa, that's cool, I want to be able to extract all kinds of fun stuff, there are other things you can pivot out, like the hours, the sessions. Like we said, you can go crazy pivoting things and extracting out information. If you guys want to know more about that, obviously use YouTube. Somebody out there will probably show you how to do it. But if you want to just feel like you're kind of comfortable with what he showed, you can also just add an additional column and say, for example, you wanted to do an hour and you wanted to extract out what does it do at 9 o'clock every day. Just add that hour in, go back through each of your trades that would actually be during that time, just kind of add them in on the column of the hour, and then you would use that and pivot that. But if you want to know more about it, like I said earlier in this recording, we can go into full on detail on how to pivot and extract a lot more information if you guys are interested in it. So just let us know, because we're always open to suggestions for what you guys need to see and work on. So keep us updated if you want to see more about that. But that is pretty much all I have to really contribute. I feel like this is a long recording, so I apologize for you guys who are looking for a short amount of like quick to the point backtesting. Hopefully you checked out the timestamps and got the beginning part of it. But if not, this is really important. We kind of wanted to spend the time really getting into backtesting, journaling it, how you look at the data, why we do it, and all that stuff. So I appreciate Jay coming on and doing it, as well as Bear. Thank you to my lovely co-host now. And
Hey.
do you have any final thoughts, Bear, before we wrap this up?
I just want to say it's very important that people think learning how to trade is important, and mindset is important, but without data to back up what you're doing, I think ultimately you won't be successful in your trading career. And I think backtesting is one of the most important things to prepare for trading and the things that you have to tackle while trading. So
Yeah, I think Jay said it earlier, and
Yep.
because to pay tribute to him and his sports themed stuff that he loves to say, it really does, and it's something that anybody can resonate with. Like, you understand when you see, athletes or athletes, they practice, just because you make it into a pro league of some sort doesn't mean you don't still go to practice every day and learn what you're doing and keep perfecting your skill. This is the same idea, you guys. You're taking on something in a profession now, and it is a skill. It truly is a skill that you have to learn and refine. So you need to be doing the practice, which essentially is your back testing. My next suggestion, though, and my last final number, all the way back from the beginning, I think I was up to 5. My next step after you have back tested, number 6 on that list, if you are learning what to do, is to forward test. You do not take your back testing and then jump into the live market. As we said earlier, there was somebody, I forget who now at this point, but basically mentioned that there is a little bit of a difference when you're back testing. 1, the instant gratification. 2, you are not dealing with having to actually risk manage in your back testing. You're just kind of like marking up the risk managing. But in live trading, you are having to take that one extra step of placing the trade on your broker, whoever that broker may be. And having that little bit of extra step can really throw some people for a loop when you're still learning how to trade. So be sure that you're practicing that on a demo account. You can still trade in a live market, have all the same simulations and feelings and everything in a live market, but use the demo account to practice placing those trades using the proper risk management and a risk management tool or whatever you want to use. Calculator, we offer one of those as well. You guys need to be doing that first. So practice forward testing it, making sure you're getting used to how it moves in the live market. Once you're seeing some results on there that seem consistent with what your back testing is, then you can now move into the live market with real money when you're comfortable. So that is my last final tip as far as like how to kind of get started in this and why, how to use your back testing, why you would want to back test and then forward test and then live trade. So hope this was helpful for you guys. And thank you so much, Bear. Thanks, Jay.
My
Who
pleasure.
dropped off. And all right, you guys. So that is it for this episode. This is one of the new formats. Let us know if you like it. Reach out to us. Let us know if you're liking this type of longer format lecture style video where we're showing charts. This is what was requested by you guys. And if you're feeling the vibes of this like every other week, one all talking, one showing you guys some educational content, leave a thumbs up. I never do this part.
Thumbs up, a like, and a comment.
I'm so sorry, Jinx. Edit that part. Put a little woohoo over my mouth. Leave a thumbs. Yeah, go ahead, Bear. You
Leave
do
a
it.
thumbs up, a like, and a comment. Be
Thank
sure
you.
to subscribe.
Thank you. Yes, be sure to subscribe. Yeah, I don't do that part of it. But yeah, guys, thanks so much. And we'll see you guys in episode 3 next week. Bye. I'm just staying quiet through this part because I think that you've shown enough examples. So I think Jinx can kind of zoom through the rest of this while you log it.
It's just funny because he's definitely keeping that what you just did too, Chris. This is the blooper scenario where you think he's gonna get rid of this, but he's not. I know you, Jinx. Go back and watch it. Make sure you kind of look. There's a very minute.
Sorry, I had to sneeze. I'm so sorry.
Run it again.
I'm sorry, Jinx.
Run it
Sorry,
again.
it's so cold.
Okay, just stop talking.
Studio, and I'm like sneezing.
Stop talking.
I might have another one. Just wait. Damn, Jay. Okay, I have to sneeze. You're like so heartless. I have to sneeze.
This is
like,
going in the video.
It's all in your mind, Chris. Control your mind. Control your nose. Control it.
Mind over body.
Chris, You gotta be
That
stronger.
was physical.
I'm sad this podcast isn't done in one single studio, so Christy could just lean over and smack
I
you.
would have sneezed all over him on purpose. I would have sneezed right in your face. Rude. No. God, you have no
That is
heart,
just
Jay.
that is just rude.
You're
Thanks.
rude. I'm trying
sorry.
to sneeze and you're mad at me because I can't control bodily function. I'll take your apology any moment before we begin. I'm not continuing until you say you're sorry. That was really rude.
I am somewhat sorry, even though you do it to me.
I employ you. It's different. It's different.
Honey, it's not different.
Mom
You
and
can end
Dad
up.
are fighting.
All right,
Mom
so
and Dad are fighting.
before I get
It's
into
true.
I'm just gonna.